Now, yesterday we had that news about Nigeria's inflation generally for the month of March. Headline inflation climbed to 24.23% for March, marking the first uptick since the recent rebasing and defying analyst expectations of a slowdown. The latest consumer price index data released by the National Bureau of Statistics shows a notable rise from 23.14% in February. A brief highlight of the NBS report shows that the country's food inflation rate slowed 21.79% last month, is down from 23.51%, while core inflation went up 24.43%, and that's up from 23.01%. At the same time, urban inflation stood at 26.12%, while rural inflation rose to 20.89% last month. Analysts attribute the uptick to renewed FX pressures and heightened global risk-off sentiment that triggered net FPI outflows and increased dollar demand in the local market. Let's settle on this for a bit with an economist and the Managing Director, Chief Executive Officer of Timeline Consult Limited, Mr. Shuaib Idris, right here in the studio. Mr. Idris, good morning.
Good morning, madam. Yeah. Thanks for having me.
Good to have you. Are you part of the analysts that expected a drop in inflation? Because I did hear quite a lot of expectation of a drop in inflation, and now we saw that there was an uptick.
Yes, I am. And
wow.
I have been, normally analysts seldom differ, because when you are looking at a dashboard, you're looking at certain factors, and more often than not, most of these factors, you seldom look at them differently. What do I mean? We're coming from a situation where the Naira has been fairly stable. Food inflation or general food prices went down. I mean, Nigerians noticed the sharp drop in prices of basic food stuff like rice, yam, beans. Rice used to be somewhere around 95,000 Naira per bag. 50 kg bag, it went down to 85,000 Naira per bag. Beans used to be about 100,000, it went down to about 85. And quite a number of other, prices went down, particularly on the food basket, if you like. And added to the relative stability of the Naira in terms of exchange rate, somewhere around 1,500 Naira to a dollar, and the somewhat lower prices of PMS, petroleum products like the AGO and petrol that we witness. So generally, with all these factors put together, general perception of analysts were that, the impact of these changes, positive changes, should have been felt, in the general price level. Unfortunately, the numbers came...
So where is the surprise coming from? Because even as you did say, we saw that food inflation dropped. It's core inflation that actually drove it this time. Where did that surprise element come from?
I think one thing is maybe we're a bit emotional. Analysts were a bit emotional, and the expectations were that, the pence is too much. I can't wait for the fire to be switched off. Otherwise, in retrospect, when you take a second look at the expectation, you will say, were we not euphoric in the sense that, okay, relative stability in the exchange rate. What were the stock of goods that traders have or had? Were they bought at the current exchange rate or at the previous exchange rate? And naturally, if they bought at expensive, why will they sell at, reduced prices? So maybe we're a bit euphoric. And the same thing, price of petroleum product like AGO and PMS went down. How quick did that impact, in the economy? And to what extent, for example, are transporters ready, or did they implement, those price reductions? So maybe we're a bit emotional in terms of our our thinking.
Because some people did say, I remember when we just had the rebased inflation numbers, and you know, of course, inflation dropped by 10%, and people did say, well, let's not bother. What matters is the trend. So we've seen this is the first increase since that rebasing. So I guess it doesn't change the trajectory, the rebasing, I mean, doesn't change the trajectory of Nigeria's inflation direction. We're still on the same track. Or do we say maybe after this number, let's wait for the next one, and then we can see if we are back on the path of increase of inflation, or if we'll be trending downwards?
I think either side really does not matter. What do I mean? Will we say inflation went down by 10%? No. There was a recomputation, a rebasing, and therefore the numbers were, if you like, rejigged to have a kind of a feel-good, syndrome. Nothing new about it. It's not criminal. It's not wrong to do it. Rebasing is normal in economic parlance, so that is fair. The fact that you rebase, your numbers, is that, a cap that will prevent variation, either further increase or further reduction? No. But the fact remains, whether inflation continues to increase or not, we will not be looking at, say, a 34, 35%, inflation. We will be benchmarking with 24 or 23 or thereabout percentage of inflation.
But does it capture the reality? Whether it's 34 or 24, does it capture the reality? Well,
madam, the reality is the cost of living in Nigeria is excessively high. Traders, in particular, small, micro and small scale businesses are closing down almost by the minute, not by the day, not by the hour, almost by the minute. They are not able to restock. They are not able to pass on the cost increases. Margins are near zero, if not minus. So the reality of the situation is, whether you portray your inflation rate at 3% or 5%, or you portray it at 30% or 40%, the reality is we are in a crisis situation. The economy is really, really in a fairly difficult, I wouldn't say bad situation, but difficult situation. Imagine what is happening in the world economy today. Donald Trump is causing a lot of stir with these tariffs. Prices of crude oil has headed south, and we're talking of somewhere around $60, $65 per barrel. Where do we go from here? When, remember, this year's budget, the benchmark was, I came here, we had this, we had this conversation, and I did say that 75 was a little bit, ambitious, was too high. Why don't we go for 70? But today so if care is not taken, I'm not a prophet of doom, and I'm not forecasting a doomsday, say, a kind of, but we might witness a round of devaluation, and when we do devalue, imported items will certainly, the prices will go high, and government will have to borrow more because the budget deficit will be high, so the cost of borrowing will increase, and so the consequences are
so this is another source of worry, because this data we're seeing is for the month of March. So in the month of March, we had a somewhat reduced petrol price, which fits, of course, to transport and then to food. And then also, we haven't had the impact of tariffs. So by this month, by the end of this month, when we're getting the data of this month, next month, God's grace, we should see the impact of the new petrol price, which has increased, and also the tariff. We've seen the Naira settle at below 1,006, since the impact of the tariff came in. So that means we should be expecting even worse numbers and worse impacts on purchasing power and welfare of Nigerians?
No, there might be two sides to it. Number one, the crude oil price at $65 per barrel should send...
If it stays at 60, because 64 this morning.
Yeah, give or take. What I'm trying to say is...
Within that range?
Within that range.
Okay.
Chances are, Dangote refinery and those importing the petroleum product, AGO petrol, will have to reduce their prices because the international price has gone down. Of course, like I did say, a two-edged sword. So the petroleum products should go down and prices should go down.
And government revenue should also go down.
No, government revenue will go down, but the normal thing is we can always do the ways and means account and get the central bank.
I didn't hear that. I didn't hear that.
Okay, they can borrow, they can issue
bonds and treasury bonds.
They still do it. We know they still do it. Sometimes, you borrow, it's like an overdraft. The government has the right to take an overdraft from the central bank. That is overdraft, that is what we Christian ways and means. The only thing is, overdraft is usually short time, 1 week, 10 days, 1 month at most, but government usually take months.
But there's a limit, it's the limit. I think that's the limit.
Sometimes what do you do?
Okay, but so now, another thing that comes out of the data is the fact that it's not food inflation that's driving it now, it's core inflation. I don't know if that would signal to us that our food insecurity problem has been solved, even if it's to an extent. Do you see that?
That is a $1 million question. Number one, like you did say, you alluded to the fact that, okay, tariffs have just set in, but have we started receiving the goods from the tariffs, that were, say, priced using tariffs? Not yet. Have we resolved our food insecurity? I don't think so. You see, what are the causes of our food insecurity? Fundamentally, I will give you maybe 2 or 3 for want of time. Number one, we are still using mundane technology to farm. We're not using tractors, we're not using sufficient pesticides, fertilizers, and what have you. They are in short supply. Number two, the insecurity that is pervading our land. North, south, east, west, everywhere, farmers are not able to freely go to the farm and till the soil and produce what we require. Last but not the least, there is a bit of apathy from Nigerians. Good old days, 70% of workforce of Nigerians are in the farm. Today, the younger generations, Gen Z, aren't looking at that. They would rather sit down and be thinking that they will get a white-collar job. Have we been able to solve our, food insecurity? No. Even the price reduction that we witnessed was a situation where government decided to dip its hand in our current account by allowing a few companies to import some agricultural produce, so which made the locally produced commodities prices to go down. Otherwise, the prices would have been fairly higher. And I say to whoever cares to listen that it is a wrong, step to take by government to allow importation of food items just because you want prices to go down. Remember, our farmers bought fertilizer, 50 kg fertilizer, whether urea, campa, or other types of fertilizer at an average price of between 70,000 to 100,000 naira per bag. So by the time they produce maize, sorghum, millet, beans or soya beans, and they are not able to recoup their investment, what happens next year? If we are not careful, next year, fewer people will go to the farm because they have gotten their fingers burnt, because they are not able to even raise sufficient money to buy fertilizer to go to the farm, and we may end up having another crisis, self-inflicted crisis, that what we should be doing is, even if we want to subsidize, even if we want to give a bit of incentive or subsidy, there are better ways to subsidize some of these items. as opposed to the way government has taken, this situation. Yes, it's good to have lower prices of food items, but we should be mindful of the consequences, particularly when it portends that farmers may refuse to go to the farm in the near future because they are not able to recoup their investment.
Yeah, so I wanted to ask what you think the MPC will be planning, but I remember that we'll still have another inflation number before the next MPC meeting. But when you look at it, a lot of people have thought that, we had a pause in the last meeting. Maybe in the next one, there's going to be a pause or probably a cut, but it doesn't look like we're going that way now, does it?
I don't foresee a cut with these numbers. If you take a cursory look at the membership of the MPC, you realize that, quote and unquote, a lot of members are a bit hawkish, so they are more likely to be worried, to say the best we will expect at the next MPC
is a hold. Another hold.
If not an increase.
Wow, that's scary.
Yeah, well, unfortunately, that is what the data is showing.
I know manufacturers do not want to hear that.
Yeah, but that is what the data is showing. So,
wow.
And numbers, they don't lie. Unfortunately,
yeah, they don't lie.
They are what they are.
They shouldn't. Numbers shouldn't lie. No, they don't lie. Because anyway, thank you so much, economist and managing director, chief executive officer of Timeline Consult Limited, Mr. Shuaib Idris, for your time this morning.
Thank you very much once again.
All right.